Finance executive editor Brian Sozzi, and you're taking a look at a live shot of the opening bells on Wall Street on this post-Nvidia earnings morning. Energy Council ringing the bell at the New York Stock Exchange. OMS Energy Technologies getting things underway over at the NASDAQ. Nvidia's ho-hum quarter and outlook last night is sending ripples throughout various sectors and individual stocks this morning. The market wanted a perfect earnings day from Nvidia, but the AI chip darling came up just a little bit short in this regard. All right, now the day after Nvidia earnings is like the day after the Super Bowl for us here at Yahoo Finance. A whole lot of armchair analysis going on. There's a lot to unpack from this Nvidia report. In the words of founder CEO Jensen Huang, dropped right here on our network last night. I'm going to lay it all out for you throughout the next 30 minutes, so you are left with a full picture on Nvidia stock, its competitors, and the future of AI. So here we go. First, to those bears worrying about slowing AI demand, myself, nor the street, saw it in the report. That's even with the data center sales miss getting chatted about this morning. Here's how Jensen summed up the demand backdrop.
Incredible. We had a record quarter without China, and we just guided another record quarter without China. It's incredible growth. If you look at the AI native companies, last year they did $2 billion altogether. The first year of AI revenues. The second year of AI revenues, $20 billion, tenfold increase in 1 year. And that's just the tip of the iceberg.
It's incredible. Next, Nvidia hasn't included any sales for its H20 China chip in its current quarter outlook. The street was looking for an estimate of at least $2 billion. Jensen made it a point to dissect the potential of the China market.
Every American technology company, for every American technology company, China is important to have. It's an important market. It's also, as you know, it's just really large. It's the second largest computing market in the world. I'm just delighted that President Trump sees the wisdom of American leadership, and particularly at this time where AI is taking off, it's vital that America wins the AI race.
And lastly, with the ink not even dry on Intel's deal to give a 10% stake to the U.S. government, Jensen downplayed more deals like this happening in the industry.
No, and it hasn't really come up. It's about reindustrializing the United States because we need to have manufacturing here. We need to be able to manufacture critical technology here. It's a wonderful vision, and we should get all behind it, and NVIDIA's all behind it. The second vision that we're part of is to help the United States. He wants America to win the AI race.
Here in the opening bid roundtable on this important morning for the markets, EMJ Capital founder Eric Jackson, Noah, very much a friend of the show, Yahoo Finance tech editor Dan Halley, and Yahoo Finance senior reporter Inez Ferre. Dan Halley, I want to get right to you because you and Julie Hyman had the opportunity to go step out to 18 minutes with Jensen last night, and you've talked to Jensen many times through the years. What were some of your takeaways from this? Any concerns that you saw compared to when you last talked to him?
No, honestly, and I think the general vibe was that look, the street wanted a better performance out of the data center. I think part of that was people perhaps including some revenue from China in their forecast, and so they obviously had that slight miss when they didn't have any China revenue. Ditto for the outlook. No China revenue, and Jensen basically saying that $2 to $5 billion if China plays ball at this point. But it didn't seem as though that was much of a concern for him. He touched on how the company and U.S. technology needs to play in China, as he said. Basically, he told us that the U.S. technology should be the global standard for technology. But it didn't appear as though he was particularly worried about AI or the company's prospects moving forward. He said that data center revenue is doing incredibly well. The growth is there, and hyperscalers are still buying up huge amounts of chips. On top of that, they said that they had seen $20 billion in sovereign AI revenue. So that's that segment that the company is looking to grow even further. Those are countries themselves building out their own AI capabilities, not just relying on data centers in the U.S., but data centers in their home country. And so, it looks as though the prospects continue to be bright for them moving forward. And that's how Jensen seemed to portray it to us.
Eric, Jensen has his iconic leather coat. Now you have your iconic hat. Really like that hat. You have my address. I expect you to send me one. Look, is the reality here, this is probably the fifth straight quarter that Nvidia hasn't come out and blown minds with its earnings beat. Is the real takeaway here, though, Eric, that maybe just don't play Nvidia around earnings anymore? You buy it and forget about it.
Probably. I think you're right. I mean, you had some charts out this morning, Brian, that I thought were really good, like four big charts, and they kind of sort of summarized basically how Nvidia keeps shooting the lights out in terms of like revenue growth after quarter, earnings growth, just staggering. And yet, the both the PE, the forward PE, and the magnitude of like in terms of the stock reaction, keeps shrinking quarter after quarter too. So I guess we've gotten used to it. Yet this is a stock that's still up 35% year to date. Most of those gains, though, have taken place since June. And basically, the stock treaded water for about a year from June of last year until June of this year. And then all of a sudden, it just took off. So, I mean, the stock was up today. Now it's down a bit. It's a good stock. It's one of the best. And I would say it's the best Mag 7 stock to own. So probably you're right. It's the kind of thing you just tuck it away and just sort of let it compound.
Eric, what makes it the best Mag 7 stock to own?
I just think what we were just talking about, like they are still in the driver's seat from an AI perspective, and we are still in the early stages of AI. The most interesting thing that I heard last night, I was watching CNBC Asia, and have you guys ever heard of CambraCon technology? It's basically sort of exploded. It's a Chinese listed stock, CambraCon. I hadn't heard of it till yesterday. It's 10x'd in the last 2 years. It's 3x'd in the last 2 months. And basically, they are now the biggest threat to Nvidia in China, not Huawei, CambraCon. They've had a couple of really, exciting new AI chips developed. So if I was Jensen, I would be playing that up to the hilt with Trump. And I'd be going in and saying, see, this is why we need the Blackwells in China. It's not just about shipping H20s there. It's like if we just sit around and we don't participate in this market, China, by the way, is where 50% of AI developers live. If we don't play there, there's going to be some homegrown competitor that comes out of the blue and, maybe not surpasses us, but, puts us at global risk if we're not able to kind of, establish our market share in China.
And as I'm still getting used to this, I guess, revitalized or different version of Jensen, for many years, Jensen has not really been the person you see at the White House shaking hands, trying to curry favor with administration. But listening to Jensen when he was talking to Dan and Julie, I mean, he shouted out the president and his team numerous times, saying they really like what they're doing and trying to, in terms of getting the U.S. to lead on AI and chips and semiconductors, you name it. And it's got to be a good thing that Jensen is in the good graces of the Trump administration. I mean, I guess it can't hurt per se.
That's right. And it did seem like he was also speaking to both the White House and also Beijing, because speaking to the White House saying that that he's so glad with the efforts of the Trump administration to be an AI leader, but also, and then the U.S. has to have AI, U.S. tech needs to be the global standard, as Holly was just mentioning, but also saying that China is very important, that they have a lot of AI researchers there, that it is such a massive market, that it's the second largest computing market in the world. So he was almost like he was talking to both audiences there, and really in a very diplomatic way, and also talking about the massive expansion of AI and how it can touch every single industry around. I mean, the fact that he had this forecast of $3 to $4 trillion spending in AI infrastructure by the end of the decade, Wall Street was very impressed by that.
Dan, I'm not going to sit here and BS our global audience and say that I knew those technical things that you were talking about with Jensen. I know it sounded cool. I mean, it looked really cool. It was interesting to hear you dialogue with Jensen in that tech lingo. But for those, maybe you can break it down in terms of data center sales. Why would Nvidia miss on this number? And is there any red flags from this miss that people need to know about?
No, honestly, I think it just comes down to the China number not being a part of the forecast, right? The amount that they see going forward, that 2 to 5 billion that they could see, you could imagine if you put that into the prior quarter that it would have hit the forecast. And so I think there's still a lot of just kind of cloudiness around China. I think one of the things that Nvidia would probably point out is that China's an important part of the business, but it's not the largest part of the business. It's not the largest revenue generator as far as data center revenue goes. That's the U.S. They also sell into Singapore. They also ship, obviously, to other places around the world. And so I think the China aspect is obviously important, but it feels as though the reaction to it has been slightly overblown. I think moving forward, they'll continue to work to get into that market. But it was Juliet asked last night, is it a nice to have or must have? And he said, look, the U.S. needs to be a part of China's market, needs to get access to it. But if it doesn't happen, that they don't get the licenses from China or get China to play ball, they still guided for a record quarter in Q3. So I think they would still be fine.
Eric, clearly the market is very focused on the China outlook for Nvidia. Let's say they do get these licenses, everything goes on without a hitch. Is Nvidia over $200 before the end of the year?
Yeah, I think even without China, they probably are. But Dan, as Dan was just saying, China, it's easy to forget. Like a few years before ChatGPT, when we used to think of Nvidia as just like a gaming chip company or a Bitcoin miner company. I mean, back then, this is like 5 years ago, they were doing 60% of their revenues through China. Like this is a massive market, and they basically had to throttle it down to zero, and they're still growing like crazy with AI. So anything they can do to up the ante there and gain market share back in China would is potentially just massive for this company, and certainly would push it well beyond 200, which I think is just going to come through global growth this year.
How far behind, Eric, do you think, now that we've heard what Jensen had to say, we heard that earnings call, how far really behind is AMD?
I'd say still way behind. I mean, if I was Jensen, I'd be way more worried about CameraCon than I would be about AMD. I mean, these companies in China, they move so fast. I mean, DeepSeek came out, almost out of nowhere. Just sort of knocked everybody on their behinds, and look what it did to the price of Nvidia stock. So, I mean, I think that's the real concern. I mean, these companies in China just work like crazy around the clock to catch up, and way faster than anybody expects. So that's I think where the real threat is.
And as one of my takeaways from the Nvidia earnings call is, wow, you see everything that Nvidia is doing. You see the product roadmap. I mean, they have things planned out for the next decade, and it's such a completely different story at Intel. I mean, they're not even the same. It's like they're not even playing in the same tech sphere.
No, but look, one thing to mention about the government's involvement in Intel, the stake that the government's taking in Intel, and also the revenue that the Trump administration has also negotiated with Nvidia for selling to China. It is in the interest of the U.S. that Nvidia does very well in China and sells a lot of chips to China. And now there's talk about perhaps a Blackwell product as well. So it will be in the interest. It's almost like when Trump made that deal, he almost made it so that Nvidia has to do well when it comes to China. But what I also found interesting about this call was the sovereign AI spending. I think that is something that Wall Street is very much eyeing, $20 billion targeting for this year. And that's just another example of the opportunity of AI and all the touch points in different industries.
Yeah, that is a number nothing to sneeze at. All right, Dan Halley is off to keep churning out Nvidia stories on Yahoo Finance. And Nez and Eric will be right back with you on the opening bid roundtable. Don't go anywhere. Let's fire up my stock of the day. Computer and printer giant HP Inc. had a quarter that left me thinking about old tech plays navigating the new tariff normal. Here's what I found interesting on the quarter. For starters, the company managed to beat sales estimates in a weak backdrop for high-ticket goods. You can see that softness in Best Buy's earnings this morning. HP CEO Enrique Lores told me the company is seeing good demand for its pricier new AI PCs. Meanwhile, the company's profit margins on PCs and printers didn't fall off a cliff due to those Trump tariffs. I've reported on this before this year, but it's worth resurfacing. HP has moved quickly to cut a ton of costs from its business to offset tariff pressure. It's cutting costs internally and with product costs. It has also moved sourcing out of China very aggressively. All this has me wondering if HP's forward PE ratio of a mere 8.2 times is undervaluing the company. Still with me on the opening bid roundtables, Eric Jackson and Inez Ferre. Eric, it's a little bit strange to go from talking all things Nvidia and high growth to old tech and HP, talking about cutting costs to preserve margins in the era of tariffs. But maybe there's something here. Maybe there's a cheap aspect to HP stock.
Certainly cheap. I think their big hope, maybe 6 months ago, and it's the same for Dell, was they were hoping like AI PCs was going to be some like magic pixie dust that would really help inject some growth into the whole PC upgrade cycle. I think so far the jury's still out, but it doesn't look like that. People yet see like the magic of like some stuff happening sort of like from the PC level with AI that sort of makes it dramatically different from before. Of course, we experienced ChatGPT, but that's sort of like the services in the cloud. So I think that the struggle with HP and Dell and the other PC makers is how do they somehow change the experience of using the PC, which a lot of people still see as sort of like more just functional.
What's amazing, Eric, I don't even see Dell as a PC maker. Of course, they make PCs, but you look at Michael Dell's X account. I mean, he's posting things about servers and AIs. Dell seems like a way different company than HP, even a Canon.
Yeah, that's where all the excitement and growth is. So I mean, it's not surprising that he's not talking about the latest mouse models or something. So, I mean, I think that's the challenge for an HP is like how do you sort of recast yourself kind of in this new world and taking advantage of where people are most excited. I think that's the reason for the smaller PE and why people are still sort of looking at it and trying to think of what it could look like in this new world.
Inez, I had such a depressing experience. I told Enrique Lores a little bit about it. I recently got a new printer, and I went to the most depressing store that I know, Staples. But the choices there, the competition is fierce. It amazes me this company was able to hold margins unchanged year over year in the printer business, given all the competition, given all the tariffs. And look, I mean, 8.2 times forward earnings. Dare I say this could be a value in overvalued tech?
Yeah, look, the printer segment is soft. I mean, they believe they had a decline of 4% in printers. So I think that the entire that part of the business is difficult. I mean, people are just printing less. But what I did find interesting was that they were able to mitigate this tariff situation. They did raise some prices and also just moving manufacturing out of China, which is what we've seen in the store with so many companies being able to sort of shift that manufacturing and mitigate the tariffs for the time being. And it seems to be the theme of what a lot of companies have talked about over this past earnings season.
Yeah, well, Enrique is going to be presenting, I believe it's the Citi Tech Conference next week, September 3rd. I think he's supposed to stop by HQ, so I got a lot more to ask him about the future of HP. All right, Inez, you are jumping off the roundtable. Thank you as always, really appreciate it. Eric is staying though. We will dive into his latest call on Opendoor and is why he's leading the Opendoor retail army on X. And we're gonna put that into our question of the day. And I think we are talking to the right person on this one. Opendoor shares have surged from about 51 cents in June to more than $4 today, as our guest, Mr. Jackson, has been pounding the table on the stock. He continues to be very vocal on the stock on X and clearly has a legion of supporting Opendoor bulls, or what he's calling the Opendoor army. So I have two questions for you, Eric, on this one. First, why are you so passionate about this stock and this company? And two, how much upside you think is left in Opendoor?
Well, the reason why I'm excited about it is that, like, if you think about some of the great kind of e-commerce brands that have emerged in the last 10 years, I'm thinking of names like Uber kind of revolutionizing how we, take a taxi. I'm thinking of Airbnb revolutionizing how we think about, going and staying at a B&B somewhere else. Like, if you think of like what other large markets exist where that kind of a chance for an Uberification of some sector exists, that you could turn it into a global brand if done right, and kind of it becomes a verb that our partners start using without even realizing it's a tech company that they're referring to almost. I think like global residential real estate is the big, and buying and selling your house is the big untapped market. And so when you think of, in the US alone, that's a $20 trillion market, and 14 trillion of the 20 trillion is tied to people that are tied to a mortgage. And so that's the opportunity. And then, like, okay, so what are the big, global brands that are trying to go after that opportunity and be the Uber of that space? Well, Rocket Mortgage provide, I think they're the biggest, providing sort of plain vanilla mortgages. And then you have, the Zillows of the world, where you get a bunch of looky-loos like me, going on and saying, oh, in Hilton Head, like what are some of the like nice houses going for, but with no real intention of buying. They're just sort of like, watching, interested and want to look inside the houses. So what's unique about Opendoor is they have 1.5 million sellers who come to them every year in America asking for a quote on their house to sell their house to. And that is kind of like the equivalent of like people going to the Google search bar and searching. It shows intent. And from that intent, there's a potential cascading level of services that you can offer. And so the company has done a terrible job. It has been run almost into the ground. As you said, like 2 months ago, it was a 51-cent stock. And the CEO at the time was dumping shares, RSU shares, at 56 cents. And the board was sort of like sleepily signing off on these, dumping. And there was no sense of urgency and no sense of, turning the company around. They've had a bunch of founders leave the company in 21 and 22 because they sort of had a near-death experience where they bought a lot of expensive houses and then got stuck with them on the balance sheet. But the opportunity is still there. And so as I've been involved in the company, I just continue, every day goes by, I see more value potentially to be unlocked. I see more of the opportunity to turn this into the Uber of global, residential real estate. It's just like Uber. It's the exact same playbook as Uber. You got to dominate the US first. You're going to have to go like heck against like local regulations to kind of beat back, the NAR and the kind of agents across the country who are going to fight to keep on to their 6% commission rate. But once you do that, you take it global. This can be the Uber of real estate.
Eric, I've been watching your X feed for 2 weeks on Opendoor, and it's very electric right now. Do you think this new management team, or not this new management team, the new CEO, the new interim CEO, they're taking the Opendoor army seriously? I would argue the only company I've seen take retail investors seriously, it's a GameStop. But so many companies continue to shun the average investor when in many respects, they should be paying a lot of attention to them. And Eric, I would even say, why don't they even consider you for their board?
Well, I've been asking, Brian, and they haven't been, they've just sort of, I've had a few conversations with some of the directors, and they've been sort of like a little bit arrogant, like, ooh, what would you bring to the table? Or I think you're better on the outside, kind of throwing stones and all this, treating it like sort of like a velvet rope club there. And they, the tech elites, like only know best. They, of course, are the ones who drove this thing down from 30 bucks to 50 cents two months ago. And we're about to do a 50-to-1 reverse stock split. But I would disagree with you, though, that GameStop is sort of the pinnacle of kind of retail support. I would point to the gold standard being Palantir, and Alex Karp of totally embracing the retail love. And they've always had that love. I wouldn't call them a meme stock, and I wouldn't call Opendoor a meme stock. I would call them both Palantir and Opendoor cult stocks in the sense that they've got this strong, passionate retail support that are going to be with them through thick and thin. But this management team, even the new interim CEO, he's been a little bit more responsive, but no way have they fully embraced the support from the retailers. And it's kind of bizarre because unlike Palantir, you've got, like, I would say Opendoor is now the most popular retail stock globally, and not just in America. I get people, emailing me, Brian, from Antarctica, Afghanistan, Nepal, who own Opendoor shares, who are like, yeah, ride or die to 82, Eric, we're with you. We're part of the Open Army. And yet this board is kind of flat-footed, don't know what to do. They should be exactly like Alex Karp in fully embracing the support.
Well, keep on rocking with the Opendoor army. Eric, love following that activity. We'll talk to you soon.
Thanks, Brian.
All right, coming up, Ali Canal will keep the Nvidia analysis rolling on Market Catalyst. Don't go anywhere.